All right, now we're recording. The 7th of April, Thursday night. We are looking at our live session for club members. This is recorded. I'll do the link up there for club members after the session. If you are watching this on YouTube, bear in mind everything that we're sharing with you. If you're watching this on YouTube, it's at least 1 week late. So, don't jump into trades straight away. Make sure you realize that it's 1 week later. And with that, straight away, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. All right. So as we've just been, one comment there in the chat saying that it's been a tough market. It has been a very tough market. I can tell you that I was looking at the charts through the whole day. I signaled the US CAD, which looked good for a split second, looked terrible for a long time, and then now it's turning back again. So it's still losing money, but we had some profits for a while there. So I think we might still see that play out quite nicely. I made a good trade on the euro dollar, right? I made a good trade on the euro dollar last night and also today. So last night during the FOMC meeting minutes release, and then also today. So I'll go through that with you later. But since 6 p.m. GMT +8, I was preparing for this call. I was looking through the charts, looking through what to recommend to you guys, what to look out for. But 6 o'clock, I had a thought, I had a plan. 7 o'clock, it reversed. It totally just went kaput. And then now at 8 o'clock, it looks like it's a whole new plan again. So, let's go through that. Again, back to Forex Factory, looking at the news, we did have the FOMC meeting minutes released early this morning, 2 a.m. So I've been trading all the way to, I traded that news, 2 a.m. all the way to about 3 something, went to sleep, woke up at 7, and then started the day all over again. So I'm severely lack of sleep right now. FOMC meeting minutes. Do you want me to go through that? Did you guys look through that already?
Yes, please go through. I haven't catch up with it.
I did all
Sorry.
that. I did all that on the YouTube on
It's like I'm
morning.
back to office 3 days a week already, so it's very hard
3
to catch
days
all
a week.
this. Yeah,
So that's why
75%.
you have to watch it during your lunch hour.
Okay.
Okay, hang on. I don't know why it's taking a while to load. Once it loads, I'll get to it. Just because Serene asked. Why is it not loading? I've just been having a bit of problems. Okay, there you go. Meeting minutes. No. Come on. All right. So that's the meeting minutes. You can go through the PDF. The PDF is in a lot more detail, a lot of information there, but let me see if I still got my highlights there. Yep, okay. So for me, I look through it on the HTML just because it's a little bit easier to read, less things to scroll through. How I look at the meeting minutes, I generally kind of ignore all these parts just because, it's not important, too much info there. The main things, and for that, right, I scan through I look at it as the key words I see here is really the Russian-Ukraine conflict, the invasion happening there. I skip through all that. The main thing I want to pay attention to for the meeting minutes, leading up to the meeting minutes, I've been telling you all quite a few times already, is we know that during the meeting, they increased it by 25 basis points. How close were they to increasing it by 50 basis points, and whether they're going to indicate in the future meetings what could likely be the direction taken by the FOMC, or the stance or the sentiment taken by the FOMC. So that's the things that I were paying attention to. So I tend to skip through all of that. main thing was reading the headlines, reducing the size of the balance sheet, right? So they're cutting back, reducing the liquidity, reducing the printing of money, cutting back. The main things here I highlighted from this morning was that all participants, all members agreed that elevated inflation and tight labor market conditions. So inflation is very high. I think it's a multi-year historic high. We've seen employment numbers very good. We've seen unemployment rates drop from the NFP news release last week. We've seen numbers, we've seen inflation in the hourly wages as well. So all that tight labor market conditions warranted commencement of balance sheet runoff at a coming meeting with a faster pace of decline, right? So they're going to cut back on it at a faster pace with monthly caps of 60 billion for treasury securities and 35 billion for agency MBS. Main thing is they're capping it at 95 billion by cutting back on the balance sheet. So that indication straight away to me, or to everyone actually looking at it, is that FOMC is reducing the balance sheet. So they're actually trying to strengthen the dollar a little bit, trying to take back some, not have as much money flowing around, so cutting back. So that should actually tone down on inflation, right? So that's one point there. And then I scroll through all that. One thing here was no decision regarding Plan 2 was made at this meeting, but they agreed it had substantial progress. So looking at this upcoming meeting in May, right? So May becomes a very important meeting. One reason because of this reduction in balance sheet. And then when I scroll through that as well, where's my next highlight? Oh, I lost it. Okay. So then looking at the balance sheet done, the next thing was the focus on the interest rates from the FOMC, the rates decision coming from the FOMC. I actually, when I was reading this, when I was trading this last night as well, or this morning, when I got to this point, right, we started seeing the dollar strengthen quite significantly. So it took time to read through the whole thing. And then by the time it got to that point, we saw the dollar strengthen. With inflation well above the committee's objective, inflationary risk to the upside, and Fed funds rate well below the participants' estimates of its longer run level, they would have preferred a 50 basis point increase in the target at this meeting, right? So they were preferring that 50 basis point. That's why the whole market was expecting that 50, but because of this Russia invasion of Ukraine, they only did 25. So that's why we saw the 25, but that gives you a bit of a sentiment towards the FOMC, or towards the FOMC's view that, you know, they were ready to do a 50 basis point. Being ready to do a 50 basis points means that we're likely to have seen a stronger US dollar. And then many participants noted that one or more 50 basis points increase in the target range could be appropriate at future meetings. So we've been talking about it after the last meeting, saying that May's meeting was likely to be 50 basis points. Right now we're looking at, hey, it's not even May. It could be May and subsequent meetings that could be more than 50 basis points. Putting all of that together, what this means is that we're likely to see continual talk coming from FOMC members about rates being increased by more than 50 basis points. And you can see that every time they talk about it, the dollar strengthens. Every time they talk about it, the dollar strengthens. I think that we're going to see the move happen from now all the way to the next meeting. I don't think it's going to be a straight line towards the upside. I think it's going to happen, you know, in a zigzag formation. We're going to see that move upwards, but we're going to expect more talk about that 50 basis points increase, right? And this is in particularly if inflation pressures remain elevated or intensified. So that means is if we see future or the next couple of months, the CPI data, the inflation data being higher, right, being stronger, being higher, we're going to see more talk. We're going to see that reinforcement or that force of action towards the FOMC to increase rates by 50 basis points at their next meeting. So all that put together resulted in a stronger US dollar. But bear in mind that why I say that from now till the meeting, we're going to see the dollar strengthen is because it could lead to a priced-in scenario. It could lead to a priced-in scenario that they keep talking about 50 basis points, bigger increase. Then when the news comes out, they do 50 basis points. It's not going to surprise the market anymore. So that could actually be a priced-in scenario. So just be careful of that. I think that what most people would do, or most people who don't know what they're doing would do, is to say, all right, wait for the news, 50 basis points, look for dollar strength. What we actually expect is we might see dollar strength being applied throughout from now as they keep releasing more comments about this interest rate decision. And then in particular, all participants underscore the need to remain attentive to the risk of further upward pressures on inflation and longer run inflation expectations. So that again comes towards the data, being data dependent. I think it would be interesting if we do see even stronger inflationary numbers. Is the FOMC going to do more than 50 basis points? I don't think so, but I think that they might be forced to do quite a number of 50 basis points increase in subsequent meetings from the FOMC. So look at the data in terms of inflation that might force them into further action again, right? So that's the main takeaway from the FOMC meeting minutes that was released last night or early this morning. What happened in that sense, what happened with that was we saw the dollar index, right? I'll zoom in a little bit here. Any questions so far? If you have any questions, please feel free to put in the chat or unmute yourself and ask away. So what happened here was yesterday at 2 a.m., you can see here on the time, we saw that big spike up and then that big spike down, and then it resumed back up again, right? So this is the dollar index. We saw it weaken. I'll go into the M15 just to show you what happened here, right? So this is the dollar index at 2 a.m. when the news got released. First move was the dollar weakening, right? If I went to the M1 or M5, you see it. The first move was the dollar weakening quite significantly because as you read through it, there was no surprise. They were just talking about 25 basis points. They were talking about the uncertainty, or they not talking, they were just, as you read through it, the document, you read about 25 basis points, you read about the uncertainty caused by the Russia-Ukraine conflict. And that's why we saw that dollar weaken all the way. And then as you go through the document, just imagine this, you're reading through the whole thing, and that's what happened. We saw the dollar strengthen back because it started talking about consistent, or rather subsequent rate increases at more than possibly once or more than 50 basis points over the next couple of times. So we saw that push on the dollar index up towards that 99.70 level before coming back down. Just this morning, I was sharing with you guys, and this was on the H4 time frame, that I'm anticipating for the dollar index to reach possibly towards that 100 level, but we're going to see it bounce around, consolidate, test this 99.50 level quite a bit before it moves towards the upside, because it's a very high point, right? If I zoomed out, you can see that the last time we got here was March. I'm repeating a bit but just to reinforce the idea. The last time we broke upwards from this point was in Feb 2020, shot up to that level, to close to the 100 level, and then had that big retrace, but this was because of the pandemic hitting the US as well. So that big retrace back down. But you can see that at this 99.50 level, it does test many times and has failed to break higher, apart from that one time, and then also in March 2020, where everyone else in the world got hit and that move towards reserve happened. We saw the dollar strengthen massively all the way to 103.94. Right? So anticipation here for the dollar all the way now in 2022 will be for, oops, let me make it a bit easier to see. Anticipation here will be for it to bounce around at this level, test this 99.50, and I want to see it test that 100. Might take a long time, couple of, bounce around here for the next couple of weeks, possibly move a little bit higher, move back down, move a little bit higher, move back down, and then eventually get to that 100 level when the FOMC meeting comes out with that 50 basis point increase. We'll get to about that 100 level there, right? So any questions so far on the dollar index?
Yeah, Jin, that straddle trade you did on the RBA announcement the other day, so clearly that wouldn't have worked on the recent US news, given that uncertainty. And I presume that's the risk with trading news in terms of that straddle strategy. I'm keen to sort of hear a bit more about that that play that you did on the RBA the other day.
Okay, let me think, cast my mind back a bit. Okay, remind me again. Later after the call, I'll put in the link for the straddle strategy. So there are several conditions towards a straddle strategy. The main thing I would look to do a straddle, or when I would look to do a straddle, is when this is the Aussie dollar on the H1 time frame. This was the news release for the RBA. It's only when it is at a support or a resistance level, right? So it has to be at a support or resistance level, and then also that it has to be moving in a horizontal consolidation before I start looking for a straddle opportunity, an opportunity to do a straddle. I can't remove away that. Yeah, okay. So let me just try and show you that. Okay, so you can see here with that, because it was moving in that horizontal fashion, this was the news at 12 o'clock here with the RBA rates decision, testing that support / resistance level. And in that horizontal fashion, what we saw was it was a very tight move. This was only a 12 pip range leading up to that RBA rate decision. That's why you could be looking for an entry below this point, a sell entry below 0.7530 and a buy entry above 0.7550 with the stop loss in place there. Was that a bit of your question you asked there?
Yeah, right. So in that, by straddle strategy, in that sense, you had both a buy and sell stop order on the RBA news.
Yeah. So you would have. So there's an EA out there. There's a OCO is one cancel the other. So if one gets in, you would cancel the other trade. Or you can do it a bit manually, where you would have both the buy order, the sell order there, and then if it triggers, then you would have to cancel off the counter order there.
Right. And what would have prevented you doing this? The same on the FOMC announcement, which would have obviously not worked out well. Okay,
so the FOMC announcement, one thing was I didn't really expect a big price movement, because it's meeting minutes. It's already happened. We didn't expect a big move there. The markets was not. It wasn't expecting a big surprise. It was just trying to find out whether. The surprise was that they came out and said we were expecting a 50 basis point. We're looking to do it more consistently in the future. So that didn't play out. And then you can see that this was the 7th. Where was it? At 2. Wait. Today 7th. Okay, here. I'm lost. Okay, 7 at 2 a.m. So you can see here that using the Aussie dollar as an example, this would not have worked as a straddle because firstly, we don't have it at a support or resistance level. At 2 a.m. was right in the middle of those 2 points. And then we did not have that horizontal consolidation. We had it coming towards the downside. So, you didn't have that horizontal consolidation. It'd be very hard to look for it to break either towards the upside or the downside in this kind of pattern. So it wouldn't have worked. You wouldn't be able to have properly set up for a straddle strategy.
Yeah, no, that's really good, Jin. And the dynamics of reading through a press release or a news release and inferring one direction of the trade and then get to the end of it and infer a different direction. That's very dynamic.
Yeah. So so we weren't expecting that big surprise there. So I think the main thing is that it was trending towards the downside. If we were looking to do anything at this point, right? Quite a number of old students would be familiar with what I'm going to say here is if I were to look at it and say at 2 a.m., right, or 1:55 a.m. in the morning, set an order. If you're going to have to set an order, I wouldn't set an order to buy. I would say that, hey, look at Aussie dollar trending down from the RBA news release from 76.52, and it came all the way down to 7526. You would say, okay, at close to 2 a.m., can I sell? Can I put a sell order? Stop loss above, take profit below. So it would look something like that. So you'd say, okay, I'm going to put a sell order there, 20-30 pip stop loss, 30 pip take profit level towards that next support level. Can I get into a trade? What would have happened here is you might have triggered, got stopped out, and then would have gone down again. So sometimes it works out, sometimes it doesn't. Main thing is try not to enter before news. I'd rather get in right after the news.
Great, thank you.
All right. So coming back to it, what we saw was the dollar strength. It came all the way down, bounced back up, and sat right across. I'll show you my euro trade shortly. And then, because it was a meeting minutes, there was no press conference, there was no continual comments. So we saw the price just sit across, and then in the morning, as the Aussie markets open, as the Japanese markets open, they got the same news, they read the same news, and then we saw that dollar strengthen a little bit more, and then now sitting for Aussie dollar sitting at this 0.7484 level. All right, so throughout the day, so just to, I was telling you that throughout the day, it's a hard trading day. You can see that since 12 o'clock to now, the Aussie dollar has barely moved. The Aussie dollar has pretty much just gone 20 pips. Maximum range on the Aussie dollar from 12 to now is 20 pips. Did any of you jump into a trade on the Aussie dollar? I hope not, right? So the Aussie dollar moving on a 20 pip range, no clear direction of where it's likely to be heading. Naturally, I was looking to sell it down, right? I was looking for it to track lower. If it could close below the recent low points, I would look to sell. So it came down, didn't break, bounced back up. Came down, tried to come down. You can see here, I'll zoom in a little bit more, just easy to see. So at this 6 o'clock, I saw a big red candle, or almost big red candle. I thought, okay, great. 6 o'clock, if it closes red, 7 o'clock, we might see it turn back down a little bit. 8 o'clock, I know what I'm going to tell you guys to do. I would say, hey, if it closes below 0.7466, look to sell the Aussie dollar down. But what happened? 7 o'clock, it bounced back up. 8 o'clock, it's tried to go higher, but it looks like it's coming back down again. No trade on the Aussie dollar at this point, right? For immediately at this point, no trade on the Aussie dollar. What I would say is, if it does break lower, don't be tempted to sell it yet. Be a lot more patient with the Aussie dollar, because you can see that at this 7476 level, it's hit, it's bounced up, it's hit, it's bounced up. If it does come down to that 7476 level or 7474 level, don't look to sell yet. Look to sell only if it breaks below that 7465, right? So Aussie dollar, look to sell if it breaks below that 7465. What I mean by break below, has to close, candle has to close below. Look at that. It broke, but it went straight back up. So don't rush into the trade. Let it close below before you look to sell it down. These ones are not a good example because this is trending up. So it broke, but then bounced back up. I don't have another example of it coming down. So you can see here, this is back in October 2021, where Aussie dollar broke below. And then once it breaks below, then we can see it track lower, gets resisted and track lower again. At this point, right? So it tried to break, bounce back up, tried to break, bounce back up. Quite a key level here at 7464, right? So look for it to break below before looking to sell the Aussie towards the downside. I wouldn't be too tempted to try and buy the Aussie up. It's just, you know, we're expecting dollar strength, so I wouldn't be looking to buy the Aussie up at this point. And again, look at it now, 8:30 now, and it's trying to track lower. Don't rush into the trade, wait for it to break that point before we get in. Make sense so far?
Can I ask, Jin, the Aussie USD signal from yesterday, just as a learning opportunity, what did you see to enter that? What were you seeing as a signal to enter that trade?
That was a terrible trade. Lost money straight away. 75886. Let me just get that. What's on yesterday? No, yesterday 75886. Yeah, it's about there. 884. Yeah, so about that point. So about that point there. So this is 7590, 75886. Let's say about that point there. What I was actually looking for, right? Just to zoom in a bit and show you here. As it was trending up, we saw that turn down, hit that level, turn down. And then at that point, because it was it looked like it was bouncing up. This looks like it was moving towards the upside. That was going as a full green candle. We were just before the hour close there. So I was looking to say, can this push up from this point back up towards that recent high point? So I was looking for that retrace, because leading up to this, we were pretty much in that view, right? So it's gone up, it's retraced, it's hit this 7560 level and bounced. And at that point, it looked like it was a good move towards upside, looking for that retracement or that correction towards upside.
Get you, yes. Because I'm just looking at the indicators, parabolic SAR, trend lines, so they were going against, weren't they? So would have been a risky trade or not necessarily at the time?
It was a little bit riskier, but at that point where, just as the candle was looking to close, it looked like it was a bit of a early entry, right? So it looked like something that I said, hey, if this pushed up, because we haven't seen many big green candles. So if we had one there and then the next green candle pushed up, we could see momentum push it higher. Not like that, but similar to this pushing towards the upside.
Yeah.
So it's more of an early entry, too early an entry rather than a risky trade.
Getcha. Okay, good to know. And in your sequence of signals indicators, you do talk about trend as being something to consider. How do you assess trend on this? Do you draw trend lines? Do you look at some EMA or normal moving average to establish trend, or how do you interpret trend?
So for me, how I look at trend, good question. How I look at trend is I don't have all the different EMAs and trend lines. what I do is I actually just look at it as a overall picture. So when I look at the Aussie dollar moving like that towards the upside, I say, hey, it's been trending up. It's had a it's had a retrace. So I'm looking for it to follow the trend, follow the recent move back up. Then now, the first step is the news. So we had stronger US dollar news. And then the second step is the trend. So we've seen it come towards the downside. It's reversed that big push towards the upside. Now it's reversed all the way down. So I'm saying that since the 5th of April has been trending towards the downside, what I'm looking for now, short-term trend, is to move back down again.
Yeah, gotcha.
All right. So I try not to have too many things there to try and indicate trend. I just get the overall view, and I use trend more to tell me, as much to tell me what to do and what not to do, right? So I can see that it's been dropping down like that. So I'm not looking to buy. So at least I know that, I got half the picture out of the way. I'm not looking to buy, I'm only looking to sell. So I'm looking for selling opportunities. If it's been pushing towards the upside without knowing all this, I would say that I'm only looking to buy because the recent move was towards the upside.
Yeah, it's touch and go, isn't it? Whether it's a pullback or a continuation of the trend at that point.
Usually, I would say that a correction or a pullback has to be because of a news event, a big something that has changed to lead to the trend changing. Right, so trend very seldom changes just out of the blue.
Yeah, getcha. Yeah.
All right. So that was the Aussie dollar here. You can see now that red candle is not looking very flash again. So it's sitting right across. No trade ideas on the Aussie. New Zealand dollar, on the other hand, same thing. I can tell you that I was looking at the CAD. I was signaled the CAD. I was looking at New Zealand. I was looking to say, hey, can we sell it down? Same thing. I saw that move. I saw that candle moving lower. I was thinking, can we sell it down? Didn't happen. At 1 o'clock as well, there was a red candle towards the downside. Can we sell it down? Didn't happen. It's all been sitting right across. You should not be able to enter many trades today. If you are forcing your trades, forcing too many trades out. I know that fortunately Paul is not on the call because he would have entered many trades in the 20-pip move. Can be done, but I would say that the best approach, look at on the H1 time frame, look for that clearer direction to sell or to buy towards. So no clear direction across the pairs. Yeah, that's in the chat there. All right. So again, for New Zealand dollar, all right, if I zoomed out here, you can see that since this morning, when I came in at 10, I was looking for it to close below that point. What happened here on the 28th? And then just thinking for the trades, for my own managed trades, whether I could get in for that 15 pip, a quick scalp. But what happened was that it just failed to break below that point, right? It failed to break below that point, hasn't done it. I'm not looking to sell the Kiwi dollar now. Even if it does drop now, just because it's been sitting right across for so long, even if it does drop now, I wouldn't be looking to sell. I would only look to sell the Kiwi down below 6879, 0.6879. Then I'll look to sell the Kiwi down towards that 6841 level. All right. So that is the New Zealand dollar. Euro dollar. So Euro dollar last night, I'm very happy with this. 2 trades I made last night and today. Let me just check. I got into the Euro dollar at 109.06. So right at this point, this was right after the news released. I'll show you this on the M5. Let's see. Oops. Oh no. Okay. 7th. No. Okay, right at that point. So right at that point, this was the news release, 7th of April, 0200 hours here at 109, 109.06, 109.06, about there, about this point here, right? So the news came out, I saw that shoot up. I was reading through the article, I was reading the minutes, and I was just wondering, reading through the whole thing, I go, wait, shouldn't be a weaker dollar, it should be a stronger dollar. So that pushed up, came back down, and then I sold at that 109.06 level, right? About a couple of minutes after the news release, 5-10 minutes after the news release, and then the next moment it dropped, and I got out at 108.76. So 108.76 right there. Yeah. 108. No. I got it at 108.85. My TP was 108.76. It didn't hit. I got out at 108.85. So 108.85 at about that point there. So that was a 5, 10, 15-minute trade. Got in, made 20 pips, got out. Very happy with it because it continued down a little bit more before bouncing back up again. So those kind of trades, especially because it was a news, I was very short term, get in, I made that 20 by 2:20, I was out of a trade. So 20-minute trade, got out of that. So that was just because I saw it spike up, I saw it turning down, I read through the articles, the 1 minute, the meeting minutes, and then after that, I sold it down towards that point there. Then the next trade I had this afternoon was at 109.13. I'm very happy with that trade as well. 109.13. There was this afternoon 109.13 there. Okay. So what I saw was it's gone up. It's come close to that level, it's hit the level, it's turned down. So I saw that break lower, I saw it break past that point. So 109.13 there, got into the trade, right? Just a bit earlier again, should have waited for it to break past that point. So about 109.10, but I got in at about 109.13, just a little bit earlier. And then it went down, and in less than an hour, 108.83. So 108.83, it hit my 30 pip. It hit my 30 pip stop, take profit here, right? So it just gone from that point, dropped, bounced, dropped, and then hit at 108.83 and got out within the hour, got out my trade there. So I'm very happy with that. Again, that level, similar to what happened here. During the FOMC meeting minutes. That's why I was keen to get out at that point. I was thinking that it would bounce from this point onwards. So at 108.83, got out, hit my take profit, it got out, continued lower. I was a bit agitated, thinking of whether I should sell it down further, didn't, and then it bounced back up at this point now at 109.17. All right. So for the euro dollar, that was my two trades from last night and this afternoon. You can see that this was the so-called the only pair that actually had some direction, right? Compared to the Aussie and the Kiwi dollar sitting in that 20 pip consolidation, we actually saw the euro dollar move today. This was in the morning since 12 o'clock, right? It's gone up, and then it's turned down, hit the level, and now it's bounced back up. So this is the only one we saw some directions. At this point now, what I'm looking for is for the euro dollar to continue. I'll move this in a little bit so it doesn't mess up, right? I'll look for the euro dollar to continue up. I want the euro dollar to go up, possibly towards that 109.45 level, hit that 109.45 and turn. I would look to sell I'll only be looking to sell the euro dollar down if it hits and turns back down again. Same trade idea as what we've been talking about. You know, let it hit, turn down, you'll be looking to sell below 109.33. Stop loss about 30 pips, same like that. Take profit, you could go to the recent low point of about 67. I would say that 56 will be a safer take profit level there. I'll be looking for that trade. If it doesn't go all the way up and it turns from this point, you can also be looking to sell, same as what it did in this afternoon. It tried to go up, didn't turn back down, look to sell back down again. But based on the way price is moving right now, I think that we might see it push at least towards that 109.33 level, same as what happened here. All right, so again, euro dollar, good setup coming, not right now. I hope it makes sense to all of you so far. Euro pound, wait, before I get to the euro pound, let's look at a pound dollar. So pound dollar, I was just talking about this morning. Look at it, hasn't done anything. Was supposed to try and break lower, didn't bounce back up, break lower, didn't bounce back up. It's sitting between that 1.31 and 1.3060 level. Nothing happening on the pound dollar. Don't try to force a trade. I was very tempted to look to see if it was going to break towards that 1.31. Didn't, turn back down. Invalidated my trade. Looking to see whether it was going to break down. Didn't, invalidated my trade. So, you know, as I sit there and I watch the charts through the day, my views are constantly updating. I'm looking and going, wait, can I look to buy this? Nope, not forming. Don't look to buy. Get out. Can I look to sell this? Not ready. Wait again. So hasn't done anything at this point. I think that for the pound dollar, we're likely to see it sit in this range between this point and this support level in this range, possibly all the way till tomorrow, right? So with that, if pound dollar is sitting right across and we anticipate the euro dollar to possibly push a little bit higher, what we could look for here on the euro pound is for this to push a little bit towards the upside, right? So I'll move this a bit. So for the euro pound to push towards the upside, what I would be looking for. So remember, I was looking at the euro dollar to move up and then turn back down. So I'll be looking for the euro pound to push up. And then again, similar to this trade, look for it to turn back down again. So again, repeat this, look for it to sell down from that 0.8343. Take profit, I wouldn't be so aggressive all the way down. I would say take, oops, I should have been moving this. I would say that look to sell down at about that point. Stop loss, again, for 15 pips. Take profit at about 20 pips. Yeah, slightly over 1:1 risk reward ratio, but let it move up before and turn down before looking to sell down on the euro pound. All right, not the most exciting trade for the euro pound. I think the euro dollar will be better. The US yen is actually much better. So we were looking at this morning. I was indicating that if the US yen broke above that recent high, this is a trade that you might want to jump into. Again, do your own analysis, but this could be a live trade right now because it is close to 9 o'clock, 9 minutes to 9 o'clock, and it's breaking above this 123.96 level. If this candle can close above this point, then you can be looking to buy it up. Stop loss 36 pips, take profit 77 pips towards that 124.70 resistance level. So you could be looking at the US yen towards the upside here. The analysis from this morning still holds. Give it 8 minutes for this hour to close before jumping into the trade. That's what I would say. Euro yen has been fantastic, right? So euro yen, I wouldn't call this a straddle, but this buy or sell opportunity that we're talking about was on the H4 time frame. So if you looked at it on the H4 time frame, you can see that it was testing this level. So we're saying that if it closes below, look to sell down. If it closes above, look to buy up. This did close below. So if you did get into that trade, you might have been stopped out now, or would have been stopped out now, because your stop loss would be there. But now that it's breaking a bit higher, could be looking for that upside move. Looking at the H1 time frame, I would say again, let the candle close, but I wouldn't think that it will move that 126 pips towards the upside, because for this euro yen to push 126 pips towards the upside, we need euro dollar to push significantly higher and yen to push significantly higher. What's happening? We're likely to see yen push up, but euro dollar move up a little bit before turning back down again. So I think that this could be a short-term trade. So you could be looking to buy this if in 7 minutes it closes up. Your take profit maybe at that 46.50 pip take profit level, that recent high point, more likely than that 126 pip move towards the upside. But you can see that it's in the last couple of minutes, 6 minutes to the hour close, it's struggling to break higher. If it closes right at that point, don't enter the trade. Wait for the next hour. Wait maybe about 9:15 before you see whether it's got that momentum towards the upside before looking to get into that trade. If it closes there, don't assume and jump in straight away. If it closes slightly above, give it a little bit more space, look for a bit more of a stronger momentum towards the upside before trying to buy it up. Pound yen. So on pound yen, this morning I was telling everyone that it's sitting right in the middle, do nothing on the pound yen. And also because with the pound dollar sitting in that horizontal fashion, again, no trade opportunities there. But those of you who are a bit more short-term trading, you can actually be looking, because the US yen is pushing higher, look same like the euro yen, you can look for it to push above 162. I would say be a bit more conservative and say 162.30. Look for it to push above 162.30 before looking to buy. But I think that because it is right in that area there, looks a bit unlikely. We've seen how it's turned from that 162.20 level. You could also be looking to sell. I would best suggest focus on the euro dollar. I think euro dollar for tonight is possibly going to be the one that makes a bit more of a safer profit. You can make profit across a lot of other pairs, but safer profit on the euro dollar. Pound yen could bounce in this area quite a bit more before it finds any clear direction. So I wouldn't, if you're doing super short term, yes, but I wouldn't recommend it too much. You can look to sell it down, but I just don't like the tails and shadows on pound yen at this point. All right. And then USD CAD. US CAD, oh, did we hit our US CAD? We're coming close to our stop loss on the signal. So the signal was sent out 1.2549. So 1.2549 is at about that point there, right? So what I was looking at is with the US CAD pushing up, hitting that 1.2570 level, and then turning down with that pushing lower. 1.2549 was there. So I was looking to see, I'll zoom in a bit. All right, so I was looking for it to do a reversal at 1.2549. Didn't reverse, oh well, it reversed, went back up, pushed back, hit that resistance level, turned back down. We saw some profit again before now turning back up. I would say if you did jump into that trade, you know, in 3 minutes, if it does close like that, I think momentum will push it towards the upside, hit that stop loss. I would say, you know, save that couple of pips. You could close out that trade now if you haven't closed it already. So that was the US CAD on the H1. For the signal, I was anticipating a reversal towards back down again. Why? Because this afternoon, we were also looking at the dollar index. This afternoon, we're also looking at the dollar index losing some strength. We're looking at it pushing a bit lower. So I was anticipating, you know, a bit of further retracement on the dollar. So if that further retracement on dollar was likely to push or to pull the US CAD back down slightly. So I was looking for that correction of a trade. Any questions again? Oh, I've lost everyone. So XA gold, I did the analysis this morning. It hasn't done anything at all. Since this morning at 11, it's just gone down, gone up a little bit. I would say that for gold, possibly going to sit in this range, this 1930 to 1919 level, no real directions. Just be careful with gold. All right, so I think that you should gather that my biggest, the one that I'm most attracted to will be the euro dollar. For it to move towards the downside, you can see that it's tried going up and it's not like, doesn't like going up. It's trying to turn back down again. So, you know, I would say look to sell the euro dollar down. If in 1 minute it closes red, it will look something like that. Then I would say, you know, you could even be looking for that. Oh, it did close. You can be looking for that selling opportunity towards the downside, but it didn't. It's closed. Oops. It's closed green. It's going to push up a little bit more, I think. It is 9 o'clock. It's going to push up a little bit more, possibly for the next hour or the next 2 hours when the US market opens and gets a bit more momentum. Then we might see that dollar strength come back into play, because you can see that the dollar has just been sitting right on that 99.50 level, not doing anything at all. So not a very exciting trade scenario here for pretty much across the board. Everything sitting in consolidation. Like Serene was saying, no clear directions. There's no directions. I like to trade when it actually shows me an upward move or downward move, then I'll just continue with that momentum. All right, so with that said, any other questions? Happy? All good? All right, so if no questions, what we'll be doing tomorrow, we'll be looking at the US CAD. Hopefully it turns back down, but we'll see. The US CAD, and we're looking at dollar index and also the couple of cryptocurrencies for tomorrow's currency call. Try not to trade too much tonight. I don't think we're going to see massive movements from this point on. With that, trade well, try not to trade safe, and good night. Bye-bye.